It is Monday, September 17th, 2018. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was very educational. Get your ass kicked at Jiu-Jitsu Monday. We did a little bit of sweep action, and honestly, I'm very happy for having done that because I suck at sweeps. I really need to work on sweeps and sweep defense. Although I did manage to stand pretty much the whole time until I went with Emilio. This dude is awesome. I'm telling you, man, that guy, I have my doubts. I really think he's a black belt from somewhere else, but he wears the yellow and green belt of mystery and shame. Only because I don't know why, really. I don't know why he wears it, but he looks very familiar. Like, I've seen him fight before, and so, you know, it's one of those things where, I don't know, that every once in a while somebody will come through our gym and it's like, where does this guy normally train? What does this guy normally do? And the last time it was this guy, he was a former world champion judo player, as in like 1972. I haven't seen him back. His name was Mike. But I could tell by his grips that he's definitely got game or you know, definitely had game at one point or another. And I think he kind of hurt himself trying to submit me or something, but I don't know. It was weird. I applied a little bit of strength, but not like... I really didn't like try to overwhelm him. I've been trying to assume a more passive role with regard to being an opponent. You know, more letting my opponent direct the form of battle a little bit. You know, only until I can let them make a mistake that I can't help myself but take advantage of. But yeah, that's. Like I said, I feel like I've been over talking during the conversation of jiu-jitsu, and that's really what it is a conversation, you know, I mean, or an argument rather. And but if it were just an argument, I don't think there would be so much strategy involved. I mean, it's more like a debate. Yeah, it's more like a debate because there is strategy involved. You know, you definitely want to try and set up your opponent. It's like on, I think I commented about a guy I went against on Friday, but I'm not really sure, where he had been leaving his arm laying on its side, like, you know, he's signaling that it's a touchdown or something on the ground there. And I'm like looking at this arm, you know, because I've got my chest on his shoulder, and it's like I don't want to panic him because I want to grab it and you know, get him in a Kimura and or an Americano. I get confused on which one is which. Anyway, I had his arm completely isolated, and so like I said, I tried to divert his attention away from it just long enough for him to put it back on the ground. And as soon as he did, man, I grabbed his wrist with my left hand, grabbed my wrist with my right hand, and that was that. And I kind of feel bad because I've been working, like I said, on trying to be a little more passive. Like, you know, on that particular match, I tried to let him direct it a little more. You know, where he was putting the pressure on me. Like, initially I was actually backing up, you know, to try and allow him into my space, and then as soon as he was in my space, then he, you know, that's that. Anywho, so as far as today in sweeps, I suck at sweeps. I need to do more sweeps and more sweep defense. I'm okay at sweep defense, but I need work. You know, like I need work managing when I tuck into my knees and whatnot. Because like a few times with Emilio, I did manage to pass his guard and at least get to a half guard, which is a much more dominant position than I had originally started in, which is, that's always good. But nonetheless, like I said, I need to bone up on that stuff. And so, like I said, I'm very grateful that today we actually did go through that kind of material, because it seems like we do spend a lot of time on the ground doing the arm bars and the arm bar defenses and the like, and that's cool because you got to do that stuff. It's jiu-jitsu. Just the same that there is a stand-up component to jiu-jitsu, and most fights, almost all fights, are going to start standing before they do eventually go to the ground. So it's good to have a stand-up game as well. Anyway, let's go ahead and throw down into some music. And as normal, I have not picked a damn thing. I'm thinking Corrosion of Conformity. No, I figured it out. I know which one I want to start with. Where is it? Not that one. Yeah. Cannibal by Static X. Here on Coin Metal. And that was Cold Chamber with Me Loco. Or actually just Loco. And I have yet to post the metadata for that. Damn it, Jim! Just got a little bit behind. It happens. I'm gonna throw that up really quick here. But as far as material, we have a ton of tabs open today. As a matter of fact, I know exactly where we're gonna go. But I do want to start off with something for Verge. Apparently, a little bit more of the roadmap has come out, and some new implementations have come out as well. So we are still awaiting the ultimate finality of the new code base, but it should be coming along soon. From what I understand, they're like 99% complete, and they're still doing some testing and shit. And I mean, when it comes to that kind of stuff, wouldn't you rather they actually find the bugs and shit during the testing phase instead of on your desktop? That's my feeling anyway. I mean, some of you guys like to live dangerously. I am not one of them. Anywho, with regard to that, this is Development Update 5. And I'm assuming this is by Sven van Zanten. And it was authored September 16th, 2018. And so here we go. Development Update on Verge, number 5. As you know, we are volunteers, but that doesn't mean that we aren't actively working on improvements. I'm sure some of you are interested in what we've done since our last update. Let me walk you through it all. To begin, I want to thank the Verge fam on the positive feedback we have been receiving. Your trust in us is precious, and we thank you for it. We are really happy to get your feedback and constructive criticism. As such, we are always trying to improve our communication and provide better transparency. Again, if you have something to tell us, we are available on Telegram, Discord, Twitter, Facebook, and our email is contact@vergecurrency.com. Welcoming a new developer. We are proud to announce a new developer to the Verge Currency core team. If you haven't met him on Twitter or Telegram already, please welcome Manuel Cabras, originating from Italy, living in Switzerland. Manuel is our new .NET and Java software developer / engineer. His addition to the team has already impacted us positively. We hope you will like him too. If you have Twitter, go give him a follow. Let's see here, scrolling down. Insight API clients. Our previous development update, we mentioned the possible creation of separate packages for the Insight API to have developers choose their own languages. For days after mentioning this possibility, We have jumped on this challenge like a pack of hungry lions, and delivered. TypeScript Insight API client, and there is a GitHub. Well, I didn't even tell you. This is on medium.com/vergecurrency. There's a URL here for that. Marvin delivered the package, tested it, and it's ready for beta just two days after the article. The documentation is still on the roadmap of this project. We use the tor-request package to make all requests to the Insight API private. Swift Insight API client. And I delivered the package a day after Marvin, tested and ready for beta use. The documentation is still on the roadmap of this project. This project doesn't rely on a Tor request library. That's because of the way URL session plus Tor.framework works. So the user can decide how to handle this themselves. All the client needs is an instance of URL.session. Yeah. Java Insight API client. Oh, and that previous one was actually for the Swift API client. This one's for the Java Insight API client. Luckily, we had Manuel joining the development team and providing the code for the Java version of the clients. The package isn't fully tested and doesn't contain a beta release yet. Of course, it is still being worked on. Wallet roadmaps. There are multiple wallets that are, quote, in progress at this moment. iOS wallet, Electron, not Electrum, Qt with the new codebase. We don't have any set release dates for these wallets, but we will continue to provide you with progress through these development update articles. In a new desktop wallet, github.com/vergecurrency/vwallet. To update, the desktop wallet is our most complete product since Marvin started working on it in January of 2018. We are waiting for the new codebase since it was built on the current one. Since we developed the Insight API clients, we have successfully integrated it as well. There are a few minor issues that need to be taken care of, but it's almost done. And that one's on vWallet issues, or vWallet/issues. iOS wallet. And this one is github.com/vergecurrency/vios. Our most anticipated wallet for iOS is being developed smoothly. We are currently focusing on ensuring the design works with various visuals and turning these into code. Once these views are created, we then move to work on the back end of the app. We are using our Swift Insight API to work with the blockchain to provide to produce a wallet on your iPhone or iPad. Let's see, scroll. New Android wallet. This wallet upgrade is on our roadmap as a project for 2019. Seeing as we currently have a wallet, it is not a top priority. Ledger progress. Our team has developed a prototype proving we can integrate Verge into a Ledger Nano S. We are currently considering different possibilities for more security features. We are also relying on Ledger HQ to integrate our code into their product. Currently done. Number 1, generate an address. Number 2, custom menus, etc. Number 3, test integration into vWallet. To do. Number 1, send and receive transactions. Number 2, fix images, logos, etc. Codebase revision. Suddenly a wild CryptoRect appears. Hello everyone, CryptoRect here. We have taken note that our community has wanted more information when it comes to what exactly this, quote, codebase revision means and how it is going to make Verge even better. We've been fairly silent on this for a while now, but I would like to give you a very brief idea of what to expect when we fully tested and implemented these changes. Firstly, the codebase revision effectively means we are rolling up from our current code, Bitcoin Core version 13.0.0, released in August of 2016, and moving all the way up to the most current version available to date. Yeah. What does that mean for Verge? It is difficult to completely summarize the benefits of moving our core code to the latest revision of Bitcoin Core. However, some of the most notable changes that the end user will benefit from are as follows. Number 1, substantial blockchain performance improvements. Number 2, greatly improved chain validation via improved POW implementation. Number 3, revised and improved RPC commands. Number 4, greatly improved chain security. Number 5, greatly improved CPU and memory performance. We understand that there is going to be a small subset of individuals who would like to read further into the changes coming. For those folks, we will be posting changelogs that have been modified to accurately reflect the changes we are implementing into our blockchain upon the public release of the new codebase. These changes will be viewable in a few locations. Our wiki on GitHub, which has already been modified to include the newest RPC commands coming. Number 2, our primary repositories documents file, doc, will be modified to also house the change logs. What is going to happen in the future when there are new revisions of Bitcoin Core? It has been a fairly substantial task for our development team to bring our existing code up to par with the latest and greatest offerings provided by the Bitcoin Core team. However, this arduous task has been completed and released to the public. We will no longer have to do this in the future. Moving forward, as changes come down the pipeline from Bitcoin Core development team, we will be able to quickly and efficiently select from the list of available features implemented on the latest public release candidates and implement them into our own blockchain in a matter of days rather than months. We are very excited about this, and you should be as well. Commonly asked questions. Lastly, I want to take a moment to address a few of the most common questions I receive. Will Verge be implementing SegWit? We will not be implementing SegWit onto our blockchain, nor do we have any plans of ever supporting this feature in the future. That's a relief for me. Will Verge be utilizing or implementing the Lightning Network? We do not have plans to support this feature on our blockchain at this time. And honestly, I don't think there really is a need for that, because the block time is 30 seconds and you can get I think it's SPV or something like that you can get a transaction verified in like 6 seconds or something like that. I mean, really, how fast do you fucking need to have your transaction clear? That's on par with Visa. Anyway, continuing on. No, hold on one moment. I read something the other day. Somebody had said that Visa actually takes 60 to 90 days or 30 to 60 days. I think it's 60 to 90 days to actually settle a transaction. That's a long fucking time. We do that shit in 30 seconds. What the fuck? Anyway, continuing on. Will Verge be utilizing or implementing the Lightning Network? We do not have plans for this feature on our blockchain at this time. Good. When RSK. Our development team is planning on tackling the RSK implementation after we've successfully released the codebase to the public. When are audits going to happen / be published? Audits will be reconducted after we release the codebase revision. We felt the first round of audits were not suitable for the release, given the fact that we had already scheduled to overhaul our core code base this year. Additional information about audits will be released in the future. When debit cards. The debit card initiative is under full control of our partners at TokenPay. Verge Currency, the Verge core team, and its associates have no say over nor influence on the timeline or anything having to do with debit cards. If you would like to know more about the debit card program that is being offered by TokenPay, please contact them here, and there's a hyperlink in there. And that's the end of CryptoRect in there. CryptoRect vanishes into thin air. Django. It seems one or two people liked the closing statement of the last development update. Well, let's keep it a thing. Meet Django. He's 4 years old. He loves eating, sleeping, and cuddling. If you don't pet him enough, he'll get sad. It's a cat. Cool. Alright. And so there we have it. And, yeah, it's good to hear some update as far as, like, what exactly they're doing. I like that they do settle those questions concerning segregated witness and Lightning Network right up front. Although I have heard tell of atomic swaps being enabled with them. I don't know. I've heard tell. That's about as far as I'm going to go on that one. But the point being that if they're putting out any kind of announcement like that, chances are that we should be expecting to see this in a couple months, maybe. Tops. At least the stuff that's actually scheduled, or not like affirmatively scheduled, to the fullest. But for the most part, we do have a loose schedule, some idea that they are working on stuff, and exactly the kind of things that they're working on. And honestly, I'm pretty excited. I think it ought to be a boon for us, given the market conditions out there. Although I don't know, I want to think that the turnaround is here, but I'm not quite convinced. It's not really hit me in the gut that yes, we're there. I don't think we're there yet. Anywho, the next one, I wanted to cover this just because we have been seeing a bit more from Doge, a little bit of uptick in their activity, and it seems they're going to help Elon Musk get rid of Ethereum scammers on Twitter. And so this article is here's on ccn.com, and it was authored September 17th, 2018 at 6:52 p.m. No indication of who wrote it, no indication of where. Continuing on. Elon Musk, the acclaimed founder and CEO of Tesla and SpaceX, recently reached out to Dogecoin creator and Adobe product lead Jackson Palmer to eliminate Ethereum giveaway scammers on Twitter. For many months, ETH giveaway scams have plagued Twitter by spamming messages on the feed of public figures in and outside of the crypto sector to lure new users into falling for obvious phishing scams such as send 1 Ethereum and get 2 back. Elon Musk reaches out to Palmer. In May, Palmer introduced a script that automatically blocks Ethereum giveaway scammers, which utilizes the same profile image of the public figure. The script solves all of the issues with the ETH giveaway scammers as it detects the presence of accounts with identical profile images and with profile figures and instantaneously block them to eliminate the possibility of the scam accounts to comment on the posts of public figures. The script developed by Palmer proved to be effective as it prevented newly made scam accounts and bots from spamming the comment section of public figures in the crypto space that made Twitter nearly unusable. On September 18th, Musk reached out to Palmer asking for help in integrating the script Palmer developed in May to remove Ethereum giveaway scam bots on Musk's Twitter posts. And Uma Jackson, if you can help get rid of the annoying scam spammers, that would be much appreciated. In response, Palmer sent the script via Twitter direct message to Musk, assisting the Tesla CEO in successfully implementing the script. Quote, "If you DM me, your DMs aren't open, I'll send you the script. In short, it's short, simple, and you'll just run it on with cron somewhere," Palmer said. A few minutes later, Palmer stated that Musk obtained the script and discussed the issue of Twitter, specifically the inability of the platform's development team to automate and fix the issue. Palmer noted, quote, "Update, Elon has the script. We had a good chat on how Twitter CEO Jack and the Twitter team should definitely automate and fix this problem on their end though." Simple solution. The cryptocurrency community has been outraged at Twitter and its development team's struggle in solving the Ethereum giveaway scam. As Palmer pointed out, the solution to the giveaway scam bots is quite simple. Detect and ban newly created accounts with identical profile images. Yet, despite Jack stating on multiple occasions that the Twitter development team is working to fix the issue, Ethereum giveaway scam bots are still active on the platform. In June, Bleeping Computer reported that Ethereum giveaway scam bots have stolen more than $4.3 million already, adding that Twitter is nowhere close to solving the issue. But John Backus, a co-founder of Bloom, stated that the problem is more difficult when it comes to hacked verified accounts initiating Ethereum giveaway scams. Quote, "Still a hard problem. I've seen a handful of giveaway scams where the scammer used a hacked verified account, so when they change the profile pic to match the OP, it's more believable because of the blue check," Bacchus said. Yeah, let's see here. So this Twitter should, I'm reviewing some of the comments here. You got two of them. Number one is from RDD. Twitter should really give out less blue checks since they're so effortless to screw up with. And then the next one is Jason L. So the spammers don't duplicate the pic, but copy the pic, flip a pixel, and then it's not the same pic any longer, and the spam continues. Should not have said exactly what the script base is its bias off of. We will see how long this helps. Yeah, I can see some flaws in the idea of releasing it like this or talking about it quite openly. But at the same time, I like to see that there is some effort done to take care of this shit, because apparently Twitter, and on that point, I really think that they're employed by Twitter. I mean, it's like Twitter for a long time. I think they had some issue with regard to their the profitability of their market model. And they'd been staying alive on investor funds. I don't know if they've actually resolved that, but I could see where scamming people out of their Ethereum would probably be a nice little revenue channel for them, especially considering the duration of it. It's only been a few months according to this article, so 4.3 million over even a year. Pfft, that's a lot of fucking money. But yeah, I don't know. It'll be interesting to see how this works out. I think that something can be done, but Twitter isn't doing anything about it because they're either getting kickbacks or they're directly involved. And I mean, I know that's kind of a jaded perspective, but I mean, I've been online long enough that this stuff comes out like months later or years later. It's like, oh, did you know that Twitter was actually secretly harvesting your metadata from other tabs in your browser and, all this other shit. Although that's not something that's actually happened. I'm not saying it has. What I am saying is that things like that, specifically with like Microsoft. I don't know if you guys remember this or not, but in the early 2000s and late 90s, Microsoft was constantly in court, either taking people to court or people taking them to court or whatever, man. They were basically suing everybody out of the internet business and the OS business. And shortly thereafter, Linux came out, and I thought that was kind of cool. Actually, Linux came out a little bit before that, but it became more popular after that little episode. Because, the whole thing left a real stink on everybody's nose. It's like, do I want to deal with this in 10 years? I mean, if they're this abusive now, just imagine where they're going to be in 10 years. I need a fucking alternative. All of a sudden, Apple became popular again. I mean, that wasn't just, an accident. It's not. It wasn't an accident. There were things that made that happen. Just like there were things that made Bitcoin happen, and there are things that make alternative currencies to Bitcoin happen. Anywho, I got this other article here. It's on medium.com. Verge. And this is by Change Hero, September 17th. Verge. Quote, "We make cryptocurrency for everyday use." Verge is a cryptocurrency designed for people and for everyday use. It improves upon the original Bitcoin blockchain and aims to fulfill its initial purpose of providing individuals and businesses with a fast, efficient, and decentralized way of making direct transactions while maintaining your privacy. Number 1. What problems does Verge help to solve? Our mission is to empower people around the world by bringing blockchain transactions into everyday life. Verge makes it possible to engage in direct transactions quickly, efficiently, and privately. Verge uses multiple anonymity-centric networks such as Tor and I2P. The IP addresses of the users are fully obfuscated. The Core Qt wallet has built-in Tor integration as well as SSL encryption that adds an extra level of security. Number 2. What opportunities does your coin/token open to the holders? You can use Verge to purchase items/services from over 120 vendors worldwide. The coin itself has value, so the potential of the coin increasing in value is an opportunity as well. We focus on privacy/anonymity while still being a public blockchain. We have Tor and I2P built in for ultimate security for customers and businesses to utilize. We also take advantage of stealth addressing as well. Number 3. How do you support your project? People can join in the multiple social media platforms we are active in. We are active in Twitter, Telegram, and Discord, and Facebook. All core team members are active and responsive to the community and love talking/discussing ideas. Since we are open source, developing assistance can be done through GitHub. Number 4. How to get XVG the best way. Buy XVG on any centralized or decentralized exchanges listed at vergecurrency.com/get-verge. One of the most convenient ways to buy Verge directly with the credit card or exchange it with any crypto on changehero.io fast and with no registration. You can even buy it with 0% commission some days. 5. What is your plan for the future development? We believe Verge will continue to grow in price as it becomes more and more adopted around the world. We have a lot of new development improvements coming out over the next few months. XVG can be used as a means of payment with over 120 vendors in our main focus, blah, blah, blah. Okay, yeah, this is a bit of a sales pitch. Okay, cool. I was hoping it was a little more in depth than that, but, it's cool. They're giving us props. ChangeHero.io, but that's because they allow our trading pair there, which, if you've been wanting to get away from the centralized exchanges, that seems like a potential option. I'm a little bit leery about giving them my bank details, but as long as you're dealing crypto to crypto, I think you're probably safe. Anyway, let's go ahead and throw back down into some music, as it has been a little while. And as far as what to play, though, I've been wanting to play this song. Here it is, Corrosion of Conformity, Vote with the Bullet, here on Coin Metal. And that was Slipknot with The Blister Exists. And I'm trying to find something really quick here because I've got an article about it, and I want to see if I can find any more about the actual suit in question, because it seems like we've been seeing some issues with the NYDFS, and with there was the creation of a bank, and the NYDFS is kind of dragging their feet and putting them through pretty significant regulatory morass. But it could just be that the process is there just to weed out people that are really serious about it. But to the extent that I was reading into it, at least, it seemed that this was a particularly biased action, just given the duration of things involved. But we did review the lawsuit in total, and TNB, who was suing or putting some action against the NYDFS, they themselves had not met the basic regulatory requirements, and you can even tell that through the process of the lawsuit. Just reading through the materials, it seemed that they thought they were going to be able to do what they were going to do without any kind of regulation. All of a sudden, the SEC comes to them, or the NYDFS, or somebody barks at them and says, "You can't do that," or or worse yet, or not worse yet, but or otherwise, that maybe they just didn't know the full level of regulatory morass they were going to have to deal with. And maybe certain elements weren't immediately disclosed, such as time windows for submitting certain materials or receiving materials from the NYDFS, or certification from the NYDFS, or one of the other associate banks that has to be like part of the process. And so when looking at it from that angle, it seems to me that there were things that TNB could have done that they either ignored doing or didn't know they had to do initially, and were dragging their butt about actually having done it. Whichever the case may be, this is starting what looks like a little bit of a weird bubble of events happening in New York. And so, let's see here. Let's find this next one. I'm trying to find the most comprehensive article about this, because the one that I have is pretty short, and I feel like there's probably a lot more to it. And oh my goodness, yeah, we definitely want to read this one. All right, yeah, this one's a little bit longer. Oh, and we even get an attribution to who wrote it. I love it. Anyway, this one is on housingwire.com. New York sues federal government over fintech bank charter plan. NYDFS is taking the government to task over decision to offer bank charters to fintech companies. Oh. They're trying to preempt the state, and the state's saying, no, we run shit around here. Anyway, this is authored on September 17th, 2018 by Jeremiah Jensen. And I'm just going by the name, but I'm going to say yes. Penis. New York State's top banking regulator sued the federal government to void its decision to award national bank charters to online lenders and payment companies, saying the decision was unconstitutional and posed a threat to consumers. Oh, Jesus Christ. Really scaring it up. But there's another report on this too, so we're going to have to check that out too. According to Reuters, Maria Vullo, superintendent of the New York Department of Financial Services, called the Office of the Comptroller of Currency's decision to allow fintech companies to obtain bank charters, quote, lawless, ill-conceived, and destabilizing of financial markets. Yeah, in other words, you're going to have to serve up with some fucking competition. Deal with it. That's been the reality since 2009. Sorry, hon. Continuing on. Vullo feels that states like New York can best regulate those markets, and that the OCC decision leaves customers up a creek in danger of exploitation of the threat of a return of, quote, too big to fail institutions and the inability of local banks to compete. Oh my fucking God. This is hilarious. Okay, because basically they're saying, at least from this paragraph, it seems like they are saying that New York has a constitutional obligation to run the entire fucking economy of this country. I want to know where in the Constitution they say the NYDFS gets to determine the rules and standards of the United States federal government. And for the entire United States in effect. I'd really like to know that one. Anyway, continuing on. Blah, 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 too big to fail. And another thing, the too big to fail thing, those institutions are too bigger and even more to fail at this point. You know, I mean, they're much bigger than they were at the too big to fail deadline. So, you know, what's going to happen when they do fail? Are they too bigger to fail now and we're going to bail them out again? I don't think many Americans are going to like that. As a matter of fact, if you recall, there were people gathering at what do you call them? Post offices, and they threw a major fit. They were, I'm pretty sure they were the founding of the Tea Party, and it was in response to the TARP bailout. Anyway, continuing on. Vullo currently oversees more than 2,200 banks, financial service companies, and insurers with about $7 trillion of total assets. Yeah, Vullo would be really concerned. Continuing on. Quote, financial centers like New York, which have developed comprehensive and well-functioning regulatory bodies, should not needlessly bear the harmful brunt of an overreaching federal agency. The complaint against the OCC said, the OCC made the decision to offer charters to non-bank fintech companies back in July, citing customer needs and potential for innovation as the primary catalyst for the edict. Quote, the decision to consider applications for special purpose national bank charters from innovative companies helps provide more choices to consumers and businesses and creates greater opportunity for companies that want to provide banking services in America. Companies that provide banking services in innovative ways deserve the opportunity to pursue that business on a national scale as a federally chartered, regulated bank. Comptroller of the Currency, Joseph Otting, said in a statement. Quote, providing a path for fintech companies to become national banks can make the federal banking system stronger by promoting economic growth and opportunity, modernization and innovation, and competition. It also provides consumers greater choice, can promote financial inclusion, and creates a more level playing ground for the financial services competition, he said. I could not fucking agree more! Yes! My God, it's happened! A federal official has made a lot of sense concerning cryptocurrencies. It's fucking happened. Continuing on. Vullo was one of the first to speak out against the OCC decision, saying earlier this year that the NYDFS opposed the move, and now New York is taking the federal government to court over the OCC's decision. Vullo, New York Governor Andrew Cuomo, and the rest of New York's government have been active this year, moving to counter rollbacks in corporate oversight they feel endangers consumers. Yeah, bullshit. It keeps other fucking players out. That's what it does. That doesn't endanger consumers. That elicits more fucking competition for them. Earlier this year, New York became the first state to subject credit reporting agencies to direct oversight from its Department of Financial Services. Cuomo made this move under the belief that federal regulation did not do enough to cure the potential, curb. They forgot a fucking B in there. The potential of another Equifax-esque disaster. That's not your fucking call, Cuomo. At its heart, the complaint is the latest skirmish in a tooth and nail fight that has been raging between worried consumer protection agencies and the Trump administration, as the administration has been rolling back consumer protection guidelines in favor of corporate independence. Fuck yes. I don't know that I didn't think I would like some of the things that Trump has done, but I have to admit, he has done some good things. And I mean, I know that's pissing somebody off right now, but you know, the alternative, in my eyes at least, was a person that had already shown that she was fully capable and of a mind to abuse the authority of whatever office you gave her. And she saw that she was completely above the law in doing so. That, you know, her reasons for doing so were good enough. Doesn't matter if they were constitutional, doesn't matter if they were legal, doesn't even matter if they were according to InfoSec and OPSEC guidelines given to her by the Secret Service or any other federal agency. She wanted to do it, and so she did it. So that tells me that she does not belong in the presidency, because there are checks and balances, and with someone of that mind, it seems to me that she would simply kind of wiggle the gears of the Washington apparatus to exercise the authority of her office in ways that were completely unconstitutional and against the founding documents of this country. I mean, that's just my own perspective, though. I'm just going by her record. And like I said, it seems that she has a proclivity to abuse power. So, there you have it. Anyway, back to this OCC thing. I have to admit, the OCC is apparently going farther looking ahead than the NYDFS. As far as I'm concerned, the NYDFS since 2014, all of their involvement in crypto has been, there's been one interest behind it, and that has been maintaining legacy entities' current hold on the U.S. economy, and in exchange, the world economy at large. And I don't think that's an appropriate position for the NYDFS to be in. I really don't. They, as far as I'm concerned, they should be able to define rules for the border, the area that is New York, and that's it. None of this shit that, me here in Oregon, I gotta go by New York's standard of law, and that's just bullshit. I'm not a resident of New York, so why should their shit apply to me? Maybe, as far as me doing business with people in New York, hey, that's going to be on them. Because apparently somebody in New York decided to contact me and become a customer of me some way, somehow. Now, of course, I would probably disqualify them because, honestly, I don't want to deal with the NYDFS. But that's as far as I could go, as far as, if I could see that they were from New York, I'd be like, okay, no, sorry, bro. You're within a jurisdiction that's been defined a digital gulag, and we can't do business with you. Talk to the NYDFS if you want to change that. that's all you can do, because, if you read BitLicense, it explicitly says that you can't do business with anybody in the state of New York without being licensed with this fucking BitLicense. It's scary shit. It really is. And I think the OCC is doing the right thing on siding with the American people. This is, they like to couch it in terms of, this is a threat to you. This is about big companies taking shit from you. And it's not true. What it is the federal government getting the foot off your throat and opening up to the possibility of you competing with the banks under the NYDFS charter, the 2,200 banks and other legacy entities that they control. People are having trouble with this exchange of control, and that's to be expected. But there's certain realities that I'm sure are making themselves very, very clear to those that are very interested in maintaining the current status quo. And that's that no matter what they do, all they really do is put people in jail. They don't really slow down innovation. Because this isn't just happening in New York, and it isn't just happening in California, and it isn't just happening in Texas or Colorado or Utah or Wyoming or New Hampshire. No, it's global. Because it's global, and the development of it is global, and it's not just confined to Bitcoin anymore. There's a shit ton of other projects out there. The idea of being able to, put your thumb on one spot and have the dam be, stop dripping, that's just over with. You got to start thinking about rebuilding the dam. Because it's not going to sustain the flow of economic activity that crypto is going to issue forth into the world. It's not going to sustain it. And I'm certain that we're not going to be existing in a paradigm where the NYDFS is determining the financial services rules for the entire country. Because that's effectively what they're saying that they have the authority to do, is define what a bank is for every state in the union. And to me, that's bullshit. That's not America. No one state has that amount of authority over the others. But we'll see how this thing goes. I wanted to check into this OCC thing here. And this is interesting because it didn't happen all that long ago. It happened July 31st, 2018 is the date of this article here. And it's on Housing Wire too. But I want to go for it because I think this one will give us a little bit additional background. And you'll be able to tell whether or not this actually applies to you. I mean, whether or not this might actually set a precedent for you and your business. Again, housingwire.com. OCC to begin offering bank charters to non-bank fintech companies. Move already angering state regulators. No, just pissing off NYDFS. And this one was authored by Ben Lane. It was authored July 31st, 2018. Continuing on. Tuesday was a big day for fintech companies. In addition to the Department of the Treasury rolling out a series of proposals that could alter the playing field for fintech companies, the Office of the Comptroller of the Currency also announced Tuesday that it will begin offering bank charters to non-bank fintech companies. The change, which goes into effect immediately, overturns years of opposition to the OCC expanding its bank charter rules. But according to the banking regulator, the decision is, quote, consistent with the bipartisan government efforts at the federal and state levels to promote economic opportunity and support innovation that can improve the financial services to consumers, businesses, and communities. In a statement, the Comptroller of the Currency, Joseph Otting, said that fintech companies that offer banking services, quote, deserve the opportunity to be treated similarly to federally chartered and regulated banks. Quote, a national bank charter is only one option among many for companies engaged in the business of banking. Other options include pursuing state banking charters, appropriate business licenses, and partnerships with other federal or state financial institutions, the OCC said in a statement. Quote, the option to apply for a national bank charter allows these companies to choose the best business model and regulatory structure for their business and strategic goals, which will help them meet the needs of their customers throughout the nation. According to the OCC, each application for a banking charter will be reviewed based on its, quote, unique facts and circumstances. Additionally, fintech companies that receive a special purpose national bank charter will be supervised like, quote, similarly situated national banks, including rules involving capital retention, liquidity, and financial inclusion commitments. Pardon me. Much like banks, fintech banking companies would have to submit a, quote, acceptable contingency plan that would lay out a plan to deal with, quote, significant financial stress, i.e. losses, that could threaten the company's existence. The OCC said that the decision to expand its chartering authority was made with careful consideration and follows a 2-year period of, quote, extensive outreach to stakeholders throughout the financial services industry. Quote, over the past 150 years, banks and the federal banking system have been the source of tremendous innovation that has improved banking services and made them more accessible to millions. The federal banking system must continue to evolve and embrace innovation to meet the changing customer needs and serve as a source of strength for the nation's economy, Otting said in a statement. Quote, the decision to consider applications for special purpose national bank charters from innovative companies helps provide more choices to consumers and businesses and creates greater opportunity for companies that want to provide banking services in America, Otting continued. Quote, companies that provide banking services in innovative ways deserve the opportunity to pursue that business on a national scale as a federally chartered regulated bank. Otting also said that the change will benefit consumers by giving them more choices for financial services. Quote, providing a path for fintech companies to become national banks can make the federal banking system stronger by promising economic growth and opportunity, modernization and innovation, and competition. Otting concluded, quote, it also provides consumers greater choice, can promote financial inclusion, and creates a more level playing ground for financial services competition. The OCC's move is already earning the ire of some state financial regulators, including one of the nation's most prominent ones, the New York Department of Financial Services. In a statement, NYDFS Superintendent Maria Vullo said that the move is actually a violation of the National Bank Act. Quote, DFS opposes today's decision by the Office of the Comptroller of the Currency to begin accepting applications for national bank charters from non-depository financial technology companies. Vullo said in a statement, quote, DFS believes this endeavor, which is also wrongly supported by the Treasury Department, is clearly not authorized under the National Bank Act. As DFS has noted since the OCC's proposal, a national fintech charter will impose an entirely unjustified federal regulatory scheme on an already functional and deeply rooted state regulatory landscape. Yeah, and you notice that we're only hearing one quote here, though. That says to me that the only one to bitch probably was the NYDFS. And, you know, they manage one of the bigger central banks here in the United States, or they're affiliated with them in some way, shape, or form. I can't remember all of it. But the point being that they've been waving a big-ass stick for a really long time, and every time somebody else that was trying to release something like Bitcoin came up, they had, you know, the assurances of the federal government that, hey man, you say it's cool, we'll support you. You don't say it's cool, we'll support you there too. And would back the NYDFS in chasing after people. And so to see this now, this tells me though that two things. Number one, they could be trying to get a bigger grasp in crypto, and that's entirely a possibility. However, as I've stated numerous times on the show, nature doesn't tolerate noxious and toxic elements that it doesn't need to. You know, the federal regulatory boards, if they become too obnoxious, and the entities that they do provide licensure to, you know, the thing, if they abuse the system, you know, then that they have to wear that. But you know, the thing that bugs me, it's not that the New York Department of Financial Services is intervening. It's that they're intervening in the mere application for it. There's nothing in the OCC statements that suggests that they are just going to accept everybody's application for a fucking national bank charter. They said specifically that they are going to have stress requirements. In layman's terms, that generally means things like insurance. You know, you got to be able to go to the FDIC with your asset sheet and say, hey, look, we can be collateralized. We can collateralize all this, you know, liquid wealth or whatever. You know, how much can you extend to us insurance for? You know, how much can we debase our reserves and still stay viable? And what kind of reporting requirements do we have? You know, the fact that they're against the mere application, that just says to me that it's all competition control. It's all about stopping you from kicking up the next Bitcoin or something like that, or Ethereum or whatever, that directly addresses some aspect of the legacy player's business. And pretty much everything in Bitcoin does. Pretty much everything in this space circumvents a great number of third parties that have been managing gates for centuries. This shit didn't start here in the United States. It came here to the United States. But it's been practiced elsewhere. And it's like, it's just a cycle. And I think that cryptocurrencies, in that sense, they change the nature of the cycle. I mean, I don't think we've hit maximum RPMs on this one yet. I don't even think we're like spinning yet. I mean, maybe just a little bit of spin in the wheel, but it's not fully going yet. But I think that the way that we are changing the nature of money, and from that culture, because money is a very significant cultural totem. But I don't think it will be anymore. I think the totems themselves will be less significant on a nationalistic basis. I think that in the longer term, like the next, I would say 2 to 5 years, we're going to see more open arms approach, because the federal government is going to see that their lack of involvement, their lack of regulation in some aspects of the space is allowing things to flourish. Now, we could be watching a bunch of kabuki here, where they're allowing a bunch of new players in so that they can be bought and their IP sold off and whatever. But I don't know that that's the case. I think that the federal government, the U.S. federal government, is looking at it from a global perspective. And they're seeing the kind of effect that cryptocurrencies are having in very impoverished areas. And they're saying, if we ever have a major financial crisis, like that too big to fail thing again, if that thing ever happens again, if we leave the arms open, people will rush into cryptocurrencies. And that's going to spur all kinds of growth, because people are going to need hardware to mine because of all the additional activity. People are going to want those transaction fees. And so, like I said, I think the difference in the type of cycle that we're going to be going through now is so significant that they have no real choice but to back off of it. And I've said this a number of times, but this is literally the mad quagmire of our century. That companies are going to, in countries rather, governments are going to become more welcoming to cryptocurrencies because they can see that it will benefit them. We haven't even gotten into the next step of cryptocurrencies as far as mining is concerned, but we're working toward that. And I have seen some projects that lead me to believe this is a growing trend and it will continue into the future. And that's that cryptocurrency mining companies, they are not just, putting into a building and firing up a bunch of miners and adding a big ass leech to localities' electrical systems. They're going steps further. They're applying for bonds for improvement of local infrastructure so they can get more electricity and better bandwidth to their area. That serves everybody local to them. Because one of the things that sucks about living in a rural area is that we don't get very much attention from ISP services. And so we're stuck with one, maybe two providers, and that's it, that can service our area. And that's pretty much been the case for as long as I've been on the internet, because I've lived out here in the fucking sticks this entire time. But I know for a fact that if they were to set up some sort of mining operation near one of our numerous lakes and converted the dam into a hydroelectric facility, one that's not currently a hydroelectric facility, and there are many. And that will improve the locality here. For one thing, it'll drop the electricity rate because we'll have another fucking hydroelectric dam here. For another thing, it will improve the options for ISP services because there's going to be this big ass fucker out there that needs a lot of bandwidth run out to them, and I'm going to be between them and the biggest hub, so I'm going to benefit from that additional bandwidth being made available. This whole series of benefits, we've been seeing it happen. The employment end of it's a little bit shy just because, well, you don't need a whole lot of people to manage that shit. But just the same, the financial activity that they bring into the area wasn't previously there. And the improvements that I'm talking about, again, there was nothing pushing anybody's pencil any faster to get them to happen on their own. Something needed to come to the area and motivate it. Well, a mining operation. Again, we've seen this help out in China, where they're getting into the phase where those miners that have been out in the boonies in these villages, they've got wives now, they're getting kids now. They're going to be supporting families now. They're going to be spending more money in their local economy and the broader economy. And this will increase financial activity. And then China will wake the fuck up and say, you know what? The people are doing well from this and this is benefiting us. So we're just going to get our foot the fuck off of it and let it happen, because it seems to be working out in the U.S. and it was working out here, but then we put our foot down a little bit too hard and things got all fucked up, at least as far as the rest of the planet was concerned. I don't know. I look at mining and I see it as the thing that will push us past this. That what we're still dealing with is national currencies, national fiat currencies, and the way they impact the markets and the way they're dispersed and the interest rates of them and so on and so forth. Those unaccountable things popping up into your fucking pocketbook and on your balance sheet fuck you up in a number of ways. And it makes it to where only really well invested and highly secure legacy partners can participate. The rest of us have to go fuck off. Well, I think Bitcoin is an expression of that. No, we want inclusion too. You can't just, board the doors and expect that we're going to continue to transact in your token, because we're not liking the effects of your tweaking on the interest rate and you're tweaking on the supply and you're tweaking. We're done with that. We need predictable disbursement. People bitch about the volatility of cryptocurrencies, but they never stop to think where the volatility is actually occurring. Is it occurring on... because again, when you look at the price of a cryptocurrency in US dollars, you are looking at an exchange rate. There's two elements to this exchange rate. It's not just, it's not just Bitcoin. It's not just events in Bitcoin that affect the price of Bitcoin. It's events that happen with the US dollar too. So when the Federal Reserve fires up that printing press and starts printing off $100 billion a month, additional to what they're already printing, that will depreciate the value of the US dollars already in circulation. That will cause the price of Bitcoin to go up in relative value to the US dollar. So again, the dynamic is twofold. It's not just one element. The US dollar isn't a quote-unquote stable coin. It's lost 98% of its purchasing power since its initial issue. So, you ought to get it. It's practically fully debased, and that's why Bitcoin is $6,200, $6,300 a Bitcoin, whereas when it started it was worth, until 2011 it wasn't worth anything. At least not to the broader economy, because nothing had actually been purchased in US dollar valuation. And then there was the pizza event. But that just showed that it can happen. It didn't show that it's ever going to stop. And alts have shown us so far that it's probably not going to stop anytime soon. And so it's more a matter of retaining the interest of your market. If the metrics of your coin get too screwed up and it's advantaging one party too much, the market will respond. It'll suddenly become a noxious element. It'll be too big, too hard to transact, too expensive to transact, too slow to transact. I'll find something that will fit my fucking use case and move my business there. Or do my business in that coin. Because again, cryptocurrencies exist to serve us. And they want us on their network. They want us mining. They want us transacting in their coin. So, how bad do you want it? Do you want it bad enough to disadvantage yourself a little bit from where you currently are? Maybe allow a little more freedom to happen on the network? Because that seems to be the position of the OCC. They're like, this is obviously a fucking tsunami wave. It's clearly way over our heads. Let's just back off, see how it develops, address real fraud, address real crime, and then maybe 20 years from now really start hammering down on it. When we've actually got tools that will allow us to get ahead of it. And in that sense, I think that's kind of a losing race. That, these things are already out. They're already open source. So it's just a matter of whether or not you want to dedicate some time to working on them. And that is an urge I do not believe that they will fully extinguish. I mean, there's plenty of people out there that, despite whatever rules have been imposed on their lifestyle since they adopted it, or were, whatever rules were against their lifestyle at the time that they adopted it, they do it anyway. And it's all a matter of value. How much is it worth to you? Is it worth more to you to cheat than to play by the rules? If so, you're going to cheat. Because that's the cheapest and most efficient way to put the fucking money in your pocket. Is it right? I don't think so. But I don't get to make that choice for you. You have to make that choice. As far as I can see, there are so many opportunities to make money legitimately in cryptocurrencies that there really isn't any need to fraud anybody. If you're doing what you're doing right, you will make money. If you have people interested in what you're doing, you will make money. If they enjoy your product, they enjoy your coin, they will use your coin. If they enjoy your services, they will use your services, they will pay you in the coin. You made money in the coin. And that's how this whole thing is supposed to work. So, anyway, let's go ahead and throw back down into some music. I'm kind of winding down just a teeny tiny need to recaffeinate. And, I haven't played Nothing Face in a really long time. So, here it is. Can't Wait for Violence. Here on Coin Metal. And that was Meshuggah with Marrow. Kind of cut it a teeny tiny short, but I got this really short article, and I wanted to do this just because, well, I like this subject. It's on Cointelegraph.com. This is by Anna Berman, and this is authored approximately 13 hours ago. BBVA executive. Cryptocurrencies are perfect, but often used for illicit activities. Which makes them perfect for bankers. Continuing. Cryptocurrencies are, quote, perfect, but are often used for bad purposes. Executive chairman of multinational Spanish banking group Banco Bilbao Vizcaya, Argentaria, Francisco Gonzalez Rodriguez stated in an interview with CNBC Friday, September 14th. Gonzalez has claimed that the world is going through, quote, an incredible digital revolution which will eventually lead to a new world order. However, the BBVA executive has also stressed that there are, quote, ripple effects that must be understood. He later explained the risks of digital technologies, quote, cryptocurrencies are perfect, but are used for bad purposes today. So, one has to be careful. Blockchain and distributed ledger technologies are also perfect, but they are big tools. But the cryptocurrencies must be understood, especially the corner where the malpractices are going. No, you just need to not worry about it. When asked about BBVA fintech instruments, Gonzalez explained that the banking group is considering them as an option. Quote, when we buy fintechs or invest a 10% or 100% stake, we are buying options. It can be billions. It can be nothing at all. We will see over time, he said. In April, BBVA became the first global bank to issue a loan using blockchain technology throughout the entire process of a €75 million loan, approximately $87 million. BBVA CEO Carlos Torres then said that blockchain technology was, quote, not mature, and adding that it would face major challenges in the future. However, in July, BBVA signed off on a new blockchain-based loan of €100 million, approximately $117 million, for a civil engineering firm, ACS Group. BBVA is a Spanish bank founded in Bilbao in the late 19th century. According to Econopedia, an Econopedia report, BBVA was the second largest bank in Spain by assets and capitalization in 2015. BBVA Bancomer, owned by the Spanish group, is reportedly the largest financial institution in Mexico. Francisco Gonzalez Rodriguez has been working as BBVA Group's executive chairman since 2001. So there you have it. We're not quite mature enough for them yet. As to what that exactly means in the context of finance, I'm not entirely certain, but I will say this. The OCC is certainly indicating that they're a little more confident than this guy. Regardless of how he feels about it, I think that regular commerce, including illicit commerce, will be happening here on the internet for a long time to come, and cryptocurrencies are just the latest facilitator. They're certainly not a perfect facilitator, and certainly not the only facilitator. So I think that a lot of the panic is overblown, and that in the longer term, I think these people will actually see that and understand that for the most part, proof of work coins are better managed than any fiat currency currently in existence. And that's not just my opinion. You got a decade of faithful use, or a faithful service rather, of the Bitcoin network. And that's basically all you really need. Anyway, it is with that I'd like to close out this episode. Thank you very, very much for your support. I certainly do appreciate it. We will be back again on Wednesday at 8 p.m. Pacific Standard Time. So until then, I want you all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. As far as a last dance is concerned, I have not picked down anything. As usual, trying to fly by the seat of my pants, and I've occasionally kind of backfires on me because I'm left scrolling at the very, very last minute, and I'm not seeing the song that I want. Damn it, Jim. Well, I'll just keep scrolling and I'm sure I'll find it soon enough. Here we go. Just scroll down the fast way. And I did play one song by Static X, but I really wanted to play this one. I didn't play it. I don't know why, but here it is. Off of Wisconsin Death Trip, Push It by Static X. Last Dance here on Coin Metal. Thank you again for listening, and y'all have an excellent evening.